largest Fintech Fest, the Global Fintech Fest 2021. This event is organized by Fintech Convergence Council and Payment Council of India of the Internet and Mobile Association of India. It gives me immense pleasure to introduce you to today's panel discussion on the topic Role of Fintech in Building a Better Post-Pandemic UK-India Perspective. Joining me on stage is Mr. Zubin Tafti, Director Payments Transformation at PwC India. We are joined by Ms. Rashmi Satpute, India Country Manager Wise. We are joined on stage by Mr. Gurjodhpal Singh, Chief Executive Officer, Tide India. We are also joined by Mr. Suhail, Chief Executive Officer, BharatPe. We are also joined by Mr. Vaibhav Joshi, Chief Digital Officer, Equitas Small Finance Bank. He'll be joining us later on the stage. So without wasting much time, let me hand over the stage to you, Mr. Tafti. Over to you. Thank you.
Thanks, Vivek. Thanks for that introduction. And hi, good afternoon to everyone, and to all the other listeners out there. Just to get started, maybe I think let's get to know each of us a little bit better. So I think we'll spend maybe 30, 60 seconds for introducing us, and then we'll get straight away into the meat of the topic. So I'll start with myself, Zubin Tafti, a Director of Payments Transformation Practice in PwC. Been 15 odd years of experience. 90% of that has been in the world of payments. Predominantly, we are a very focused team that focuses in payments consulting. We cover the entire value chain, right from strategy right down to operations, processes, and regulations or technology for that matter. My mandate per se in PwC is to drive all sales and business development activities with two broad segments. So one is, of course, all the non-banking clients in the country. So the Fintechs, the tech payment processors, the large big techs and things like that deal in payments. And the other one is we as a competency or a COE in the PwC network, a large team of 50 odd members. So we get pulled into a lot of projects across the network, as we call it in PwC. And I do a lot of work in regional areas, more predominantly the Southeast Asia, the Middle East, and the Africas are kind of the areas that we do a lot of work. So that's a short introduction about myself. Going on to the panelists, ladies first. Rashmi, over to you.
Hi everyone, good afternoon. I'm Rashmi. I lead Wise for India and South Asia market. Wise was formerly known as TransferWise. We are a UK headquartered fintech, and we are focused on making cross-border payments much more seamless, cost-effective and instant across the globe. Prior to Wise, I have been working in the payments ecosystem for almost a decade now in digital as well as cross-border payments. Very glad to be here.
Gurjodhpal, over to you.
Yeah, thanks, Zubin. Hi, all. Very glad to be here, and thanks to the organizers for having us, but for organizing this amazing, event over the 3 days. I was listening to number of discussions, so I think amazing effort. I lead the Tide, which is a SME-focused neobank in India market, and just for the listeners' benefit, we are the leading SME-focused challenger bank in the UK, and we have more than 6% market share within SMEs in the UK market, and we are bringing our product to India. Along with that, we have a large development center based out of Hyderabad in India, and we also have another development center in Bulgaria. So that's us as an organization. I personally come with more than a decade of experience in fintech. Have been part of early stage teams in Bank Bazaar and then in PayU, where I spent close to 7.5 years prior to my role with Tide. So look forward to the discussion today.
Thanks, Gurjodhpal. Over to you, Suhail.
Yeah, hi. Glad to be here. I think been a wonderful session. I did manage to catch a couple of other panels. I run BharatPe. We are India's largest offline payment processors on UPI. We roughly sort of do $12 billion of transaction annually on our platform, and on the back of that, happen to be sort of the largest lender to small shopkeepers, right? So. And I think as we sort of go on to build the business, we are We continue to be sort of heavily merchant focused, but are introducing new products on the consumer side, especially around sort of buy now, pay later, etc. Right. So I'm new to payments. I'm new to lending. My background is consumer. I used to lead consumer brands. Happened to lead launch a couple of consumer brands which you may have come across: Saregama, Karma, Tuyam. They were sort of some of my earlier launches, and before that spent a bunch of time in McKinsey leading the consumer practice for Asia.
Thanks, Suhail. Over to you, Vaibhav.
Good afternoon, everyone. Vaibhav Joshi this side. I'm the Chief Digital Officer with Equitas Small Finance Bank. So as a part of my mandate, I lead the neobanking fintech vertical for the bank. I lead the digital transformation for the bank. I lead the digital payments for the bank. I lead the digital transaction banking for the bank. I lead the digital channels for the bank. I lead the digital strategy for the bank. And I also lead the digital banking sales for the bank. In addition to digital liabilities, digital assets, digital corporate, digital MSME, digital government, so on and so forth. So digital banking at Equitas is actually a separate P&L on its own. I have 2 decades worth of experience. Before Equitas, I was with ES for 6 years, started the digital banking team over there. And before that, I've done 3 startups of my own, one in food, one in payments, and one in technology. So nice to be here with you all.
Thanks, Vaibhav, for that. So I said, so hey, fellow audience, I think we have a pretty action-packed panel. We've got business banking covered in Tide. We've got cross-border payments covered in Wise with Rashmi. We've got, an upgrowing, domestic startup, BharatPe, who does stuff on the payment side and the lending side. And of course, we have a very much small finance bank, very much digitally focused, the CDO, which is in Vaibhav. So I think we have a very good panel, a good combination. I'm excited to go ahead with our conversation and hoping to get nice, varied views. So I think the first question I have is more of an initial primer and more open to most people, and I'll give everybody a chance to talk about, starting with Rashmi. But, assuming the pandemic, and let's hope the pandemic is behind us, of course, it has given tailwinds to this whole digital and, digital adoption, and I see that completely. But other than that, what are those... economies did go down. They've started recovering. We see the recovery phase happening. So what does it mean for fintechs? Are there any emerging trends, maybe it be in the UK or the India, depending on, where all each of you all play? Would like to hear any specific trends that you observed and anything that's unique to a country that you believe may not be unique to others. So just happy to hear that from the audience. Rashmi, starting with you.
Hey, thanks, Zubin. A quick one, right? So yes, like you said, the pandemic is an event that has accelerated digital adoption across segments, right? Whether fintech, whether other consumer segments as well. The interesting bit is, I think more and more, the newer customer segments that were probably a little iffy about being on digital modes earlier have now shifted to digital modes. And the interesting bit is that they continue to stay with these modes as well, right? I think there's a report that has come out that at least 9 out of 10 people who have recently shifted to digital modes, whether in consumer segments or fintechs, plan to stay on board. What does that mean for fintechs or technology companies at large is I think we are going to see a continued investment, and this is across countries, right, in at least 3 different pillars. One is trust. How well can you build trust in the consumer to transact on that particular platform, especially in fintechs where you're handing the customers money? I think trust becomes a key thing, right? The second bit is, of course, consumer experience. And consumer experience could mean even, instant gratification. So, for example, can you make cross-border payments more instant? And the third bit should be what we see is how can you make customer journeys more intuitive and seamless, right? So I think across these 3 pillars, we're going to continue to see a lot of different innovations and investments across fintechs. So that's how we see it.
Oh, thanks, Rashmi. Gurjodhpal, from your side?
Yeah. So, as Rashmi mentioned about adoption, etc. So that's been the phenomena everywhere. But along with that, what the pandemic has changed for us, specifically from a semi-neo banking standpoint, is that see the neo banking in UK is pretty advanced, right? And as we were launching into India, we had a view that this is how India would progress towards reaching that stage. But now, what the pandemic has done is the push on the enablement side, right, would reduce the time which we would take to become a advanced, neo banking ecosystem as such. This is the push, but there have been a lot of enabling things which have happened from the regulator and government side. But along with that, there is a lot of traction in the fintech ecosystem itself, right? So, for example, when we were starting out in PayU in 2013, right? So we were making a layer to integrate all the payment options, right? And any merchant who had to integrate would just come to us, and he would have all the options enabled. On this, in the similar way, right? The banks have so many digital products to offer, and if as a neo bank or as a platform provider you had to integrate it, there was a time to it. But with a number of fintech players coming in between, building out a lot of enabling rails, I think that's a new phenomena, and that actually takes the ecosystem to the next level. That's about India. Specifically on the UK side, of course, a lot of push on digitization, but what we saw was that a lot of new SMEs, registered during this time, and since there was a digital way to do that, the number of businesses which were born or which became organized, during this period were a lot larger than what was happening before that, and the trend continues. So that's a amazing thing that we have seen.
Thanks, Gurjodhpal. Suhail, over to you.
Yeah, so I think one sort of Uber theme or couple of Uber themes and a couple of places where India is different. I think as Rashmi said, digital has become mainstream. I think there is no going back. Everyone has got comfortable with the thought of using it, and everybody has sort of realized that it's actually quite seamless, right? I think COVID taught us that the easiest way to do a cashless transaction, touchless transaction is actually UPI, because you're only touching your own phone and nothing else. I think that's sort of set to remain. I think now it is up to the industry to sort of not break the trust. I will say the other way around, right? So I think what we do on sort of ensuring frauds don't happen, what we do on sort of ensuring that this remains seamless, what we do on CX will basically determine how many of the users sort of fall back to the old ways of using cash or sort of other modes of payments, right? So I think that's sort of true probably sort of everywhere. I think the second thing which the pandemic has done, it is made actually from a conventional bank point of view, underwriting very, very difficult for a loan, right? People have gone through huge swings of income. People have lost their jobs. Like a guy who was sort of lendable 18 months back is no longer lendable, right? So, or at least how a bank will sort of evaluate. I think that will sort of create huge space for companies like us who look at alternate data, for companies like neobanks, which sort of have access to other ways of underwriting. And therefore, I think there will be I think the convergence of sort of this neobank, fintech, bank, sort of co-working and sort of serving different segments of the customers and helping consumers win back sort of their credit scores and rating and getting them up and running. I think that's sort of a second thing which I foresee happening quite a lot, right? Like, just to give you context, like a typical bank will take 3 months to figure out whether the pandemic is over or not, right? So as payments will start coming back and sort of collections will start picking up. But for someone like BharatPe, which is in the cash flow and sees transactions on a daily basis, it takes me 3 days of transaction volume to figure out that we are back, right? So I think ability to sort of, and I think that's a great space for me, but it's also a great space for sort of banks and sort of fintechs and neobanks to sort of collaborate and build bigger. I think one distinction which I always think will happen, and I believe India is sort of moving towards that, between US, UK, and sort of India is, I think a lot of the world still tends to be heavy MDR dependent market, right? So, and it sort of works well because the retail margins, the shopkeeper margins are like 25 to 30%. The guy doesn't sort of mind paying you a couple of percentage on that to accept payments, right? But India, where sort of cash was always mainstream, If you tell a guy that I will give you your money into your bank account 2 days later and charge you 2% for that, I don't think that's going to fly ever, right? And that's what sort of UPI did. Like the day peer-to-peer UPI was always big, right? When it became big on merchants, the day government announced MDR is zero. Card acceptance was always reasonable. It's sort of the last 18 months or 3 years of growth on card has been on the back of RuPay saying 0% transaction fees and sort of RuPay gaining so much share. Amex credit card used to be 5% MDR at one point of time, are like now whatever 2.2% MDR. I think India will progressively move towards a zero MDR regime. I think therefore companies will have to innovate on how they make money, right? A lot of the neobanks in sort of US would actually be no banks. They are just credit card issuers, and they make money on MDR, and everything is done by the bank, right? I will not even call it a neobank. I don't think those type of models necessarily can exist in India for a very, very long time. I think people will have to become closer to a conventional bank versus like a, let's say, a distribution arm. I think that's sort of where the two markets will differ significantly. But I think my sort of biggest learning of COVID has been sort of, and we get a lot of kudos from everyone around us on how we've grown. But I think 80% of the growth is just the market shifting, right? And I think it's now for us to sort of live up to that opportunity which all of us have been provided.
Thanks. You made an interesting point about the lower fee of transactions and rather making money from them, right? And I think that's a fundamental shift, and I see that India has been one of the I think leading that charge, because it is a quite price sensitive market. Vaibhav, over to you for some takes from a digital bank perspective.
So, Zubin, I think pandemic has been a boon in disguise for fintechs. While the adoption of digital started post demonetization itself, but the sector has really seen, boomed since the consumer now has become more digital and less physical. Earlier, consumer was used to transacting physically or digitally. Today, what has happened is during pandemic, because you do not wanted to venture out of your homes and stuff, you had to rely on your mobile phone. So everything became digital, and the moment everything became digital, fintechs came into foreplay, because banks were not too much, more on the consumer experience side. So apps which had good UI UX, which had good digital journeys, they became popular. Neobanking picked up, so we see the success of NeoX, we see the success of Fi, Jupiter, Frio, MoneyTap. So on digital adoption, we see the numbers, that NPCI is clocking month on month. Personally talking about, something like a small finance bank, while, RBI brought in moratoriums, loan moratoriums and stuff. But collection efficiency, did pick up when we brought in digital collections, especially, where in a SFB kind of a scenario where there is heavy reliance on physical collection, and on the microfinance side, we have people going door to door for doing the collections. There, when we introduce something like, WhatsApp banking, when we introduce something like a URL link based collections and so on and so forth, and it worked like miracles. The collection efficiency, which was so down in phase, the last year, it has actually picked up. And it has picked up for most of the banks. If we talk about adoption from target segment specific. So if you talk about merchants as a base, yes, merchants have moved on to digital now, and success of BharatPe clearly says that. If you look about on the lending side, we are seeing Gurjodhpal and Rashmi on this panel, and we know that yes, the market is extremely ripe for picking, and there is a lot to be done on the digital lending side over there. If you talk about MSMEs or SMEs or corporate, then there is diamond dozen opportunities over there, because now everything is revolving around how a neo-banking solution or a fintech solution can be targeted. So much so that entities are now offering a mini ERP which clubs in invoicing, taxation, payments, lending, inventory, ordering, everything clubbed into a single app and bundle it and then segmentize it to a specific target. So I think pandemic has really opened a lot of horizons which we were not looking at earlier, but now we have started looking at it, and segment wise, industry wise, the TG has started picking it up. Zubin.
So thanks Vaibhav for that. I think next question, Suhail, we can get him on stage. So Suhail, this question is more from a funding, growth, market visibility India side, right? I mean, there are research studies that says India is the fastest growing fintech market. It's the third largest ecosystem, and from I think funding, we're also third behind maybe a US and a UK. I think the numbers stay around 2 point odd some $1 billion have come in the first half of 2021. So I mean, what are your key reasons why this sudden attractiveness? We've seen fundings, valuation, unicorns coming up so much more regularly and often today than maybe a few years ago. So what's really doing this demand in India? Because I think pandemic is something that's I think affected all, but still I think India has really boomed in this space. So what are those reasons why, and any particular areas, segments that you believe is benefiting the most from this?
Yeah, so I think, to be honest, I don't think pandemic was the only reason. I think the ball was set rolling long before, literally from demonetization, GST coming in, and then obviously pandemic led to the acceleration of all of this, right? And I think, to be honest, India is such a huge market. A lot of payment sort of driven innovations are actually, I think, all credit to RBI and sort of NPCI to get us onto the world map and say that India can really innovate and lead the world in sort of bringing new technology to market, right? And that sort of has created a huge spiral effect on everything else, right? So payments, like at least as a lender, I always say that lending is sort of very easy. If you want to distribute a few thousand crores of loans, you can stand on the road, and by the end of it, it's all gone. But actually being able to figure out who to lend to, and more importantly, to be able to figure out how to collect that is sort of a lot more critical, right? And sort of the payment revolution, which sort of RBI and NPCI brought in, has sort of allowed that, right? So today, I don't worry about the loans I give by and large, because unless the guy wants to genuinely default, money will come back on its own through the UPI on sort of a daily basis, right? So I think just the innovation which RBI and NPCI and a few other sort of bodies which are involved with this have shown, and sort of all the good work India has done sort of to clean up the historical challenges, has made sort of the space overall attractive. I think there was never a question on whether there is a huge market opportunity or not, right? So so many people, and like I think the World Bank report says 500 trillion credit gap, right? It's not even like how much credit is out there, it's credit gap, right? So if you have players playing in that, there are bound to be, and as soon as sort of there are ways to make payments happen and collections happen, there was bound to be, and as long as there is sort of a positive regulatory environment, I think there was bound to be tons of investments, right? And that's sort of one leg of the business which is sort of growing. And if you see everyone from us to Cred to like RazorPay, that's sort of the story which is panning out. I think as the world becomes sort of more connected and more digital, a lot of the stuff which Rashmi is doing sort of becomes even more relevant for India, right? So historically, remittances were like one-off. I don't even remember sort of ever using it as much. Today, I do probably 5 a month. And sort of the world sort of coming together has again, and Indian diaspora sort of spreading across the world has sort of again made that mainstream, right? So I think the market, like when you have so many people with reasonable sort of per capita incomes, and this is only reported numbers, what sort of still there is a large part of the economy which is in cash. The market demand was sort of always a given. I think what has really changed is the intent of the regulators to be more progressive and sort of allowing lots of experiments to flourish in parallel, and only start thinking about how to regulate, how to manage when sort of some of those experiments become meaningful enough to now be a part of the economy, right? So I think that's sort of a big shift for me. And I at least, and maybe I'm sort of biased, but I don't see this wave sort of going anywhere for the next 4 or 5 years at least.
Sure, thanks, Suhail. So I think you brought up some key points about, I think, a lot of digital government-led infrastructure being built to be able to use rails backing digitization of data, I think is an important thing that has, made things possible. And as you said, I mean, big gaps already. Demand is like it's there for the taking, and I think it's just that those solutions have to come in and enable it to be able to kind of grow. So I totally get that, and I see that they're therefore investments, because there's a lot of promise for the future. There's a lot of domestic demand that needs to be met, and I think that's one of the reasons that really is making this space very attractive for investors. So let me move on to Vaibhav from Equitas. So this is, given that you're from the banking side, you're doing a lot of initiatives internally on digital. Just wanted to understand that from a partnership side, and we've seen a lot of fintechs work with banks, neobanks, small finance banks. So just wanted to know, what are those different models in which you all co-opt and work in the market together? Any specific phases, any specific areas, or any specific models that you believe is working well for you all, or do you believe the industry is doing things differently?
Sure, Zubin. So let me, since you're asking me about engagement models, let me come more from a pure play banking perspective, from a regulatory point of view, and then I'll talk about the practical models that work in the market. Okay. So what happens is, when when we engage with any fintech, regulator only allows us to engage in a certain method, and I'm leaving the payments part aside, because payments is something that has been simplified after MPCI coming in. It's basically integration, and you don't need to really get onboarded in a certain manner. But if we talk about everything other than payments, then there is a method through which we have to get onboarded. So you can either get onboarded as a co-brand partner with a bank, okay, wherein the bank can onboard you as a program manager or a co-brand partner. Second is you get onboarded as a business correspondent or a BC, and third is where you onboarded as a TSP or a technology service provider. Okay, now this is essentially what regulator recognizes. So while the fintechs may say that we are distributing, or we are acquiring, or we are issuing, so on and so forth, at the end of the day, at the back end, this is what the regulator recognizes. And when the regulator audits the bank, the regulator actually looks at, has there been an executive outsourcing committee approval, has there been a compliance committee approval, has there been a board approval, so on and so forth. And then what are the various audits that you are doing with this fintech, what sort of an integration has been done. So when an integration is done, have you gone through the application security testing? Has the AppSec been done? And if the AppSec has been done, then what sort of encryption are you using? Are there any low points, medium points, or high points that are open? Okay, so on and so forth. So there is actually a very big governance matrix that goes on the other side, on the banking side. And whenever we partner with a fintech or a technology company, we actually go through a scoring method, depending on the vintage, depending on a whole host of things. Now, having said that, that is the regulatory path that we have to take, and we have dedicated teams who only focus on that. On the business side of things, what we do is, like any other fintech, we also run our own P&Ls, and depending on whether it's a liability business, whether it's an asset business, whether it's a payment business for a particular product or something, we decide on what kind of a fintech we want to partner, whether we want to partner from a distribution angle, whether we want to partner from a technology angle, whether we want to partner from a UI UX simplicity angle, and so on. And then once that partnership is sealed, and then basis that we decide how to go in the market. If you talk about Zubin, especially Equitas Small Finance Bank, then we have gone ahead with a 50-50 approach. So 50% of the business we do a direct go-to-market, and 50% we do with a partner-led model or a fintech-led model. So if you look at our CASA, digital CASA, okay, so we were one of the first banks to launch the digital-only savings account in the country. And if you go to our website, you can do a selfie account. We call it a selfie account. You can do a selfie SA, you can do a selfie fixed deposit directly from the website. Same thing, we have launched NeoX along with Neo. So it is the fastest and largest neobank in the country today. So that's a partner-led model. Similarly, if you look on the fixed deposit, you can book a selfie fixed deposit FD from my website, but you can do the same thing from Google Pay. You go to Google Pay, search for Equitas, and you get a Equitas spot, and you book a fixed deposit. Same is the case with prepaid. Same is the case with micro ATM. Same is the case with UPI, so on and so forth. So one is the regulatory part of it, second is the business part of it.
Sure. Thanks, Vaibhav. I think you made an interesting point. I think on the models you talked about, co-branding, BC type, and technology, and I read them as one is a fintech saying that you take care of regulations and you have a license, so therefore you do that, and I'll do some of the market-facing stuff, and that's the co-branding. And the BC is where you talked about access, right? Last mile. I think that's an area where you see some fintechs playing. And of course, the other is technology and new age tech, which you could potentially look to work with. And I think you made a very interesting point on the regulations. And I see that a lot of fintechs do say it's difficult to work with banks. But I think, as you said, it's a lot of requirements put down by the regulators, and you all need to ensure that you comply and make those checks. And I think that's why sometimes we see that friction, and it takes some time. Then people would like to move. But I totally get your perspective of having to follow and having to do those checks and balances and prove to a more prudent regulator on top of you to ensure that you comply with everything. So interesting points made by you. Thanks for that. Gurjodhpal, coming over to you now. I mean, underbanked, unbanked population segments. I think World Bank and a lot of reports have said 1/8 of the individuals, also the MSME gap, right? I mean, it's a big gap. I think Suhail, you mentioned something about 500 odd trillion in terms of the lending on this segment. So there's a big gap on financial inclusion or being able to give access to funds for a large set of people, and some of it is to do with not having documents or not having a history and not having all of that. So just wanted to hear from you, and given that you all work in this segment of getting businesses, right, and SME and MSME segments. So what is the role that fintechs can play to kind of really grow this in India from an FI perspective? Any learnings that you had with what you may have done in UK that you can bring here, or any new things that you've learned to doing in India to be able to really get to this segment quickly and fast?
This is actually very interesting. But overall, if you look, the role of fintechs in financial inclusion, I think that is very well accepted in the ecosystem. And the regulator, the government has encouraged it. Even I would say the banks, the NBFCs, and players like NPCI, all of them have created a conducive environment where fintechs come in, and by virtue of being led by technology and by virtue of the reach, right, they would obviously be playing a very important role in financial inclusion as such. But when we come specifically to the SME segment, right, there is a very important role to be played in digitization, and then in making these micro and small enterprises organized. Right, India has 10% SMEs globally, right, 64 million. Out of this, close to 35 million are unorganized, and there is a huge flow, to move from unorganized to organized. So with both these, right, if you digitize them, in a seamless, efficient fashion, if you help them get organized, say, register themselves, do taxations, invoicing, all those pieces in a proper compliant way, you essentially, have taken the first steps of, helping them get the kind of financial and digital footprint that they have, right? You need to bring a digital account to them, all pay-ins, payouts, etc. Right? So how do you do this well? This is very important. But more so, the second order thing which most of us intend to solve for is how do you bring the credit pragmatically to this enterprise, right? So now here is important aspect, which is you need to bring in financial awareness here, right? You need to help them understand the nuances of revenue, margins, cash flow in a subtle manner, and bring the first set of lines which will enable them to become a credit worthy enterprise. You should not be giving them credit in a way which sets them up for failure, right? The horrendous rates at which these people get their first credit line is essentially setting them up for failure. So that's a challenge. And with all the footprint, the challenge I'm underlining is how do you use this footprint pragmatically, and how do you bring these lines to them that they grow into a business which is financially savvy and pragmatic. Now, if you abstract out, right, what is a credit score, or what is a formula with which somebody decides to lend, ability to pay and willingness to pay, right? Now, how do you model both of these? So you could abstract out the ability to pay through various digital footprint and financial footprint, but financial awareness becomes very important in the second aspect, willingness to pay, right? And how do you underwrite? And remember, who are you competing with here? You are competing with the unorganized world. The unorganized money lender also has a framework with which he lends. Now, how do you underwrite in a pragmatic fashion, bring a product to this user, which is also competitive in terms of the rate at which it comes to that enterprise. So if you look at the basket of micro and small enterprises, right, you need to have models where you pragmatically underwrite and you figure out the better ones out of it and bring credit to them in a responsible way at the cost which would enable them to remain responsible. This is something which has happened in the developed markets, right? If you read about the journey which bunch of digital lending platforms had in the US. I think that's very important case study, and that's something which we as a market will evolve over next few years. But that part is very important. I think the focus should be to of course help them digitize and organize, get them digital footprint, and help them organize. But along with that, use this data pragmatically, underwrite and bring responsible credit to them, so that over time they become you do not set them up for financial failure. Give them credit which sets them up to build a good credit history as their journey grows. So partnering in this journey, I think that is the key and important problem to solve for.
Thanks, Gurjodhpal. I think interesting points about not just lending and giving off money at some exorbitant rates, but really, responsible lending is what you really touched upon, and I think it's a very important type, especially when dealing with a segment that's new to finance, right? And we're saying inclusion because they're not part of it, and there's a little bit of training, grooming, learning that needs to be given so that you set them up for success, and I think that's a very important part, and I think fintechs do a lot of that to get in these new players or first time MSME customers. So I think the good points made. So Rashmi, now coming over to you, given that you all operate, we're in India, operate in various geographies, international company, help in the financial innovation, and what would benefit the situation of financial access in the cross-border payments. What have fintechs done differently to disrupt this area, and what are those benefits to the end customer, right? Because this is a space that I think is becoming more and more relevant. The world is getting smaller and smaller. There are more needs, as Suhail said, that we do a lot more transfers over borders than we did yesterday, and there are old models and there are new models, right? So I just want to understand more about this space and what Wise does and how is it different from the rest, and what are the different other models, if any, that are emerging in this space.
Sure. Thanks, Zubin. So you're right? Cross-border payments is now becoming much more relevant. Customers are transacting, businesses are transacting globally, and hence there's an increased need for a new model in cross-border payments, right? So what do I mean by that? Traditionally, if you've seen, cross-border payments have been very clunky. They've been, they take forever for the intended beneficiary to receive funds. And the third and the biggest bit is that there is no transparent pricing, right? The customer or a business is actually paying a lot of hidden fees, markups, etc., and have no idea what they're paying for. This has been the traditional model. When Wise started about a decade ago, I think these were the three pillars that we wanted to optimize. The problem statement was, why isn't it as simple to send money across borders as it is sending an email today, right? And how can we make it better? So in the last decade or so, we have actually invested in our own network, in infrastructure, in having our licenses across the globe that ensures that as much as possible, money does not actually move across borders. Wise is doing payments which are faster, instant cross-border payments, cheaper to the customer as well, because we are very transparent about what the customer is going to pay. And the third thing is we're also ensuring that the customer journey is not cumbersome. It's convenient for anyone to come in and sign up on the platform and digitally transact on the platform, right? Now, I would say that fintechs such as Wise, and Wise is just one of the players in this market, but fintechs such as Wise have kind of acted as force multipliers, right, in this segment. Because more and more now, I think regulators across the world are opening up their eyes to say that yes, cross-border payments need to become much more simpler. They need to become much more transparent. So I think the European Union, about a couple of years ago, passed this transparency. That cross-border transfers have to be transparent in pricing. So firms which are helping customers pay globally have to be very transparent about what they are charging the customer. So I think this dialogue has come about only because there were newer models that were coming in the market, right? The second thing I think, and which has been a very recent announcement, is the Pay Now and UPI linkage. That is important because, again, that goes to having instant payments even across the globe, right? So while we've seen domestic markets, digital payments have gone, because of NPCI, because of the regulator, they've gone through the roof. I think the same model is going to play out in cross-border payments as well, right? So I think all in all, fintechs have been able to kind of change a little, yeah, and there's a long way to go, of course, but the presence of fintechs such as Wise have helped make cross-border payments much more seamless, much more cost-effective, much more transparent, much more convenient for the end customer, and that continued investment, right, will ensure that that trend is followed. Along with, of course, a lot of conversations and engagement with the regulators to ensure that the infrastructure also builds up.
Thanks, Rashmi. I think you did mention about prompt pay UPI. I think that's an excellent. It'd be interesting to see how that pans out. I mean, it'll be imagine as simple as doing a UPI to someone in the country you're doing to someone overseas. If it's really made as simple as UPI is today domestically, it would really be a wow. I think let's see how that pans out. Great. Vaibhav, I kind of bring you back on, and this is more again regulate. The RBI has advocated, co-origination. You talked about in the loan model, right? Banks and NBFCs entering into partnerships with fintechs and all of that to be able to address that, credit gap, and also risk sharing, kind of percentages or things that have been laid out there. So just wanted to understand what's your take on how do you see, such an initiative by the central authority, and what will be the impact to the end customer on such a model being, promoted by the regulator that work with NBFCs and fintechs out there and see how you can address the segment.
Sure, Zubin. So let us understand, what is this co-origination or co-lending model. So RBI, I think, came out with these guidelines sometime in 2020 and November 2020. And basically, it allows co-lending scheme for banks and NBFCs. The model is to improve the flow of credit to underserved, unserved segments of the society and to make funds available at an affordable cost. Now, generally, what happens is, see, banks have lower rates, okay, and NBFCs have, higher rates. But at the same time, NBFCs have a better reach. Now, the co-lending model has been brought in to make sure that the borrower gets the best of both. Okay, so where the borrower is able to, have a better reach because of the NBFC and have advantage on the, rates from the bank's perspective. In most partnerships, banks keep 80% of the loan on their books, NBFC keep the remaining 20% on their book. If you look at some examples, Yes Bank partnered with Karur Vysya Bank, Bank of Maharashtra partnered with Loan Tap, so on. Largely from an engagement perspective, they need to have a master agreement in place, before they start the co-lending. NBFC has to be the one point of contact. All the disclosures have to be there in the agreement. It has to be told to the customer upfront and so on. And finally it has to be an all-inclusive rate. There is a focus on grievance redressal. The grievance redressal typically should happen within 30 days. That's a key thing on the co-lending piece. Escrow framework, account framework has been defined for the transaction routing. There has to be a plan for business continuity and so on. If you really want to measure the success of a co-lending framework and see where it is going and what industry is looking at it, then Zubin, I think the Series A fundraising of Cred Avenue is a testament to that. Okay, we have all seen it is probably possibly one of the biggest Series A in the country that has happened, 90 million recently last week I think, and Cred Avenue actually focuses on this. So if you go through their the product that they provide, it is focusing on co-lending, and that is where this particular thing is going today. And specifically, let me pull a couple of points from what Gurjot was mentioning earlier. There are certain segments of the society where we need to understand where, if there is an intent to pay back, okay, you have to understand what kind of a customer is borrowing from you, what kind of a financial profiling you are creating. Okay, taking a couple of snippets from what Suhail was saying earlier, do you have any alternate data basis which you are going to create this? So that is where such kind of frameworks come in very, very helpful, because use of alternate data along with a robust technology like AI, and then clubbing it into a financial profiling engine, and then bringing in multiple lenders on the platform. Okay, that becomes a very, very beautiful product. And then you club a distribution at the front end, which is a combination of digital and phygital, then sky's the limit, Zubin. Okay, it's just for somebody to sit, put together a product, put together partners and roll it out. And that is what is happening in the Indian context today. If you look at the next 4 years, 22, 23, 24, 25, this field is definitely going to boom. This field is poised to grow at tremendous rates. At a very
Sure, thanks, Vaibhav. So Gurjodhpal, over to you now. And I think there's a question I see in the chat from Rahul, which says that, can you help me understand MSME, SME still sees tax rates, tax filing aspects as one of the factors making digital adoption sluggish at their end. Cost for becoming digital first is added on to the cost of SME retail. So is this, what would be your response to this?
See, it's a challenge, right? And the challenge for micro enterprises, it's typically a one-person show, right? And to do the banking, compliance, and taxation well, today you need to go to different platforms. You also need to because it's different platforms, right? You also engage with professionals and all those related ways of doing these things in India. And essentially that adds to cost, one. And other important aspect is it also sucks out of time from this micro enterprise, and essentially he could actually use that time to do his business well, right? Now, the way we try to solve this in UK and the way we intend to solve this in India is that how do you bring these things to a single platform, which makes, your banking, which helps your banking talk to your invoicing talk to your taxation, and all this comes to the micro enterprise at, one platform. And we save him money and we save him time, which essentially then he can use in doing whatever he's best at, right? He's best at running his shop. He's best at running his manufacturing unit. He should spend time there. One. Second, you take out the inefficiency of professionals, because that is expensive. And when you look at a micro enterprise, it's difficult to take out that money to pay, and hence this becomes an entry barrier for them to move from an unorganized to organized segment, or do things in a compliant way. This one. Second, also bring those benefits back to them. what are the benefits that I have as a business if I do things in a compliant way, if I do my taxation in a compliant way, so on and so forth, right? So how do we enable micro and small enterprises on that segment, right? That's also an important aspect, and I think that can also be used to further remove this barrier. So this is the role which fintechs like us are trying to play and make it easier for a micro enterprise to do business in a compliant manner.
Thanks, Gurjodhpal. So I think it's making them understand the value of becoming a lot more organized and compliant. And then I think it's not about, they see it as a cost, but actually there's a lot more benefit if once they start understanding to become compliant. So I'll come with you with the last question, and then we'll wrap up with key takeaways from each of you. I mean, in this, table stakes demanding, digital world of, making things a lot more digital, we see different models. We see banks reinventing themselves, having digital only offerings. We've heard Equitas also having a completely different P&L that focuses on a very much, first digital first kind of ecosystem. Of course, fintechs partnering with licensed banks or whatever, and the neo banking space, we have some of them here. And also then there are, payment banks that exist, which of course can do a lot of work on the payment side, but of course not so much on the, the lending side of things. So there are these players that are competing in this space. So how do you see this panning out? Do you believe that each one has their own segments and they're working fine, or do you believe there's some change that you should bring about to kind of level the playing field for everyone?
So to be honest, I think I at least feel very happy with the way things are. They will keep on evolving on their own. I think you don't want to kill sort of experimentation and sort of what the government is sort of or RBI is sort of doing, right? So I think you can always argue that some of these have been more successful, some less. Like I personally, and my sort of opinion is probably worth nothing. I believe like payment banks is a big failure. What's the point of a bank which can't even lend, right? So, but that sort of when you have 5 successes, you are sort of bound to have a couple of failures along the way. I think then that's part and parcel of the journey. I think to me, a lot of this will start converging towards we sort of, instead of worrying about taking each other's share, are actually looking at building the whole pie, right? So there are still 65% of India is still new to credit, right? So we are not, it's not like we've matured the market and like everyone is a credit seeker and everyone is running 5 loans at any point of time, right? So like we talk about credit card data a lot. There are 6 crore credit card, 3.5 crore credit card users, right? So I think each segment of the market today has a potential of becoming 20x of what it is. So therefore, it is less about competition. It is more about continuing to innovate and seeing how we can get a lot more people into banking, get a lot more people into using credit in the right way, and a lot more people to start using other financial services products, everything from insurance to cross-border payments, etc., etc. And if that sort of has to work, then NPCI, RBI, regulators, banks, whether neobanks or fintechs, they have to sort of all work on this together, right? So there will be some products which a bank will always be better at doing, and there will be some products which a fintech will always be better at doing, and there will be some which will probably be better if we start collaborating together, right? So like especially on like stuff like gold loan and all of that, you see what Rupeek does with a lot of banks on the gold loan side. It's transformative at one level, right? So I couldn't ever understand why a gold loan is at 20%, 24% cost of capital. You're taking my gold and giving me 70% of loan against it and then charging me 24% for that, right? So I might as well sell that gold and like buy it after like 12 months again, right? So I think, and that's where sort of the fintechs and the banking system sort of historical banking system come together and create sort of win-win products, right? So I think to me, this is less competition. This is sort of a lot more opportunity to collaborate and sort of collectively expand the pie a lot more than what it is today.
Thanks, Suhail. So I think it's a big space out there. Everyone can create its niche, is what I'm hearing, and each one has their varied roles to play, and I suppose it's not a competitive space, but I think it's each one finding their right spot or sweet spot to work in the ecosystem is what I hear. Okay, so given I think we have just about 5 minutes left, I want the last question to each of you. We know digital. We know each of you all come from different areas, whether it's banking, offline payments, cross-border payments, all of that, right? So if you all were to give advice, and you all have all kind of inward kind of leaders in each of those segments, if you all were to kind of give advice to other fintechs or startups or your likes out there, in terms of what is it that they should do, or what is the kind of thing that they should do next, or the right step that they should take in their respective spaces. Just one advice or one or two areas of advice that you could give to your peers or areas who are entering a space that you're in working now. Let's start with maybe Rashmi from your side.
Hey Zubin, that's a very loaded question actually, but I'll try and answer it as best as I can. I think we have been speaking about these so-called trends or the principles under which we think success is going to happen post-pandemic. And one of them, I think, a key trend that I hear is collaboration amongst different ecosystem partners, whether it's banks working with fintechs, because banks, like I think Suhail said it very well, banks will do some things well, fintechs will do something well. So how do we kind of marry that? So I think collaboration is going to be a key theme, so to speak, going forward. The other big theme, I think, is also going to be regulatory engagement, right? How do we ensure that as an ecosystem, we also work with the regulators to ensure that digital modes, whether it's in payments, whether it's other financial state, systems or services, become much more efficient, because of course models are going to change. So how do we work with the regulators to ensure security for the end customers, to ensure transparent pricing, to ensure a better customer journey? I think those are 2-3 pointers that I would probably mention.
Thanks, Rashmi. So I think important points. Collaboration is the way forward, and I think given it's FS is a little bit of a regulated space, you need to either get the regulator to come up to speed or work within the ambit of the regulator. And I think engagement and that constant engagement are good points to make. Suhail, over to you next in terms of your side, advice that you would to give people in your space.
I think one advice is probably is true for every industry is think consumer out, right? What does your consumer really need, and what are you therefore offering, which is disruptive and hopefully expanding the pie. I think this is not necessarily true only for fintech. This I could have said in the consumer forum or any other forum, but I think it's sort of the core of what you are building and why people will consume it, right? So I think that's sort of one. I think the second thing, which is more fintech oriented, and Rashmi did touch about it, is this is a business of trust, right? You're handling people's money. So people will be jittery. RBI will be jittery, and everyone else will be jittery, and for the right reasons, right? I'm not saying that there is too much regulation in this space. I think how do you build your sort of company in a way that it is sort of seamless on consumer experience, education, and sort of handling of money, I think is very, very important, because one bad event on this, it takes a lot of time to build trust, and it just takes like 2 instances of failures to actually lose the consumer forever, right? So I think over-index on sort of scalable products, over-index on sort of building tech ahead of the curve versus sort of leaving it too late and leading to sort of a drop in consumer experience or meeting the regulatory requirements.
Thanks, Suhail. I think the point on trust was important. I think we're almost at the end. Gurjodhpal, over to you for a minute, and then maybe Vaibhav for the last closing comments.
So just to add to what Rashmi Suhail mentioned, my 2 cents would be, if you're solving a problem in fintech, be it for any category, right? Please do not assume that the existing players, a bank, a NBFC, or a scheme, the question, why have they not solved the problem till now? That becomes very important. It's, I would say it's very close to foolishness saying that these people are too big or lazy, to solve a particular problem. you need to look deeper into the networks. You need to look deeper into the business to look for the problem that you're solving for. And in that manner, right, I believe a number of fintechs are solving problems not only for their TG but also for the ecosystem as such. There are a lot of ways in which fintechs are bringing value back to banks, and banks and ecosystem appreciates that. So I think getting your problem statement right, and figuring out the inefficiency that you're looking to solve for, and the value that you bring to the end customer as well as the ecosystem, I think those are some very important and difficult questions which people in fintech need to answer to in order to create positive value.
Yeah, Vaibhav, over to you last.
Sure, Zubin. So let us understand that the consumer, when it looks at a bank, it looks at a bank from a trust angle, and when it looks at a fintech, it looks at a fintech from a convenience angle. I see it as there are two types of fintechs. So one is who is into the market distributing the products. So they create their own tech, they create their own business model, their own product team, and they distribute. And then second is the aggregator fintechs who actually aggregate, who create their own product, but they don't distribute. And then there is so there are largely these two types of fintechs which have been working in the Indian space. Okay, from what I expect is the regulator may come up with some kind of an engagement framework between banks and fintech. And I was mentioning this on another panel yesterday, and that kind of a framework is important, because once that kind of a framework comes in, it will pave the way for the new fintechs who are entering into the space to understand what is the problem that I want to solve, and how do I want to solve it by collaborating with a bank. Okay, because banks are traditionally regulatorily very compliance heavy institutions, and some of those risks, once they start getting transferred to this fintechs, to this framework, then that would be the actual reality check for these new fintechs who are coming in, and that is when they would decide whether I want to get into this or not. That's my two.
Thanks, Vaibhav. I think it's not just 2 cents. Good wise wisdom for everyone entering the space. I think we're out of time, and I think I enjoyed myself. And thank you, everyone, for all your contributions. Really had a great chat. Until next time, catch you again.
Thanks.
Thank you. Thank you,
Thank you.
Zubin. Thank you, Mr. Singh. Thank you, Rashmi, everyone, for sharing their inputs. With that, it brings us to the close of this session. It was quite an enriching one, I must say. With that, I would like to thank our partners, Razorpay, Amazon Pay, WhatsApp, in association with Google Pay, Open Financial Technologies, and Cash Free Payments for supporting us for this event. Thank you, everyone. Have a wonderful day.